There's space in the front. You guys can come on up. I don't bite, I promise. Cool. So, hello everybody. This is the workshop on challenges in building neobank infrastructure. Probably just start off by spending a couple of minutes talking about myself. Before I do that though, how many of you guys heard of Simple? Okay, well, pretty much everybody. How many of you guys had an account with Simple at any point? Okay, cool. So that's probably still my biggest claim to fame, is that I co-founded Simple in 2009. Before that, I used to be a software engineer, grew up in India, came to the US, went to business school, worked as a consultant for a while. Then in the summer of 2009, this friend of mine sent me an email saying, let's start a retail bank. And you'll see how crazy I am that in July of 2009, I thought that was a good idea. Ended up moving back to the US and started to work on Simple. I had no clue what I was getting into, right? It took us 3 years from first email to actually launching Simple. And a lot of it was because neobank infrastructure didn't exist. The word neobank, in fact, didn't even exist, right? Anyway, we'll go into that in a lot more detail. But then Simple launched in 2012, was acquired by BBVA in 2014. If any of you were still customers, you realize it was actually shut down earlier this year, which was a painful experience. I left in 2015 and moved to the parent company, BBVA, and spent a couple of years building API platforms. And did that, built and launched the open platform in the US and the API marketplace in Spain, but got frustrated with the big bank lifestyle and decided to leave in 2017, and then started up Sila, which is our mission is to make money programmable. We're an API platform that helps people build and ship fintech and crypto apps, basically. And started that in 2018, and that's what I do right now. So that's my background. I'm going to spend a little bit of time talking about kind of neobank infrastructure, what's happened, and then I'm actually going to walk you guys through how to set up and install the Sila demo app. So if you guys want to break out your laptops and you have Git and Node and everything else installed, we can do it together. If not, I have a cheat sheet. You don't need all of that. I'll walk you through it. And I don't really want to be pitching Sila here. That's not the point. I want to use it as an example to help you understand kind of the trade-offs that happen in neobank infrastructure and dive into a few of the things that typically trip up people. How does that sound?
Sounds great.
Sounds great? Okay, so let's go for it then. Neobanking, then and now. So to be fair, in 2011, there was no neobanking. I don't think the word had been coined yet. And I actually went and looked, and even the word fintech on like Google word search was almost unheard of in 2011. And that was the point at which when I spoke to, like, I think it was a FIS sales rep, they literally asked me, what is an API? So there was no infrastructure, and if it existed, it was IBM mainframes, which didn't have even a conception of an API, right? Today, it's different. There's multiple API platforms, and in fact, in most areas or things that you look at, you'll find 2, 3, sometimes a dozen different options in terms of vendors who can support you. So it looks much easier, and honestly, it is much easier now than it was 10 or 11 years ago, but it's not necessarily easy. It took us 3 years to build and launch a neobank back in 2010. It still takes 12 plus months, and even with all the technology that's been built. One of the other massive things that has changed is sponsor banks. Again, the word sponsor bank just wasn't well understood back in 2010 the way it is now. And in August of 2010, I had term sheets from 3 banks, Bancorp Bank, MetaBank, and Urban Trust Bank, to launch Simple. And we thought we just raised money, hired a tech team, had a term sheet from a bank, we were going to go do this. And then the OTS did a cease and desist on Urban Trust and on MetaBank, and suddenly our choice of 3 went down to a choice of 1. And so eventually we did end up building and launching on Bank or Bank, but it set us back like 6-12 months. There was literally for a while just one bank in the entire industry. Everybody had to work with them or not work at all. A lot of this was driven by regulators, right? This was the moment in 2009 to 14 where all the regulators were still trying to clean up from the 2008 financial crisis. And the kind of the prevailing view was that there was no good innovation in banking since the ATM. So it was like, you're trying to be innovative in banking, that means you're going to try and create a credit default swap or whatever and screw up the system in a new way. We need to make sure you guys never get into banking, right? Regulators didn't understand fintech because arguably there wasn't much fintech and they didn't know anything about it. They definitely didn't understand crypto. And they were just uniformly suspicious because they just assumed that everybody was bad, right? That's changed a lot in the last decade. I'd say right now, if you talk to a wide bunch of regulators, which I do, broadly, there's actually supportive of fintech, right? Now, fintech is seen as a force for good, not unalloyed. Obviously, there's the latest, whatever, Coinbase or Robinhood or whomever is getting into trouble, there's always some story. But most regulators realize that the future of financial services is some combination of fintech and crypto, right? The traditional way of banking that worked up until 2008 is not how the future is going to look. The only question is like, what is the exact future going to look? So that has changed a lot as well. And then we come to core payment systems in the US. There's ACH, there's cards, there's wires, and there's checks. And those were the payment systems that were around in 2011, and that has not changed at all. Those are still the same core payment systems that everybody uses today. And the Fed has now been working on a new payment system. If you're lucky, it'll actually roll out in 2023, and maybe by 2030, there will be it'll make a material difference. Just to give you guys a sense of the numbers here, I think card volume in the US is roughly about $7 trillion in a year. ACH volume is about $70 trillion a year, and wires is about $2 trillion a day. And checks, I think, is like 25. So checks is the one that's declining. All the others are still growing. Any questions on any of this stuff? Because you guys have questions, just raise a hand and ask me.
So I was wondering where you get those figures from, like the source.
Oh, the Fed reports all of this stuff. There's a Fed. You should go look at the regulators they don't do a good job of like advertising it, but they collect a lot of data and they make it available. The Fed does, I think it's every 3 years or 2 years, this payment study that they report, consumer finances survey. The FDIC reports call data. If you're in fintech, you guys should be looking at all of this stuff pretty much all the time. So RTP is not, so there are a few that we could put on this list, right? So RTP would be one of them. RTP is not a ubiquitous payment system because it's a private one. It's run by the clearinghouse, which is a consortium of, it's an organization that is owned by a consortium of New York banks, right? And there's last I checked, there were about 80 banks on the RTP network. So it covers somewhere between 60 and 75% of US bank accounts, which is a lot. But the long tail of banks, right? There's 4,800 banks in the US, 6,000 credit unions. Pretty much anybody who's outside the top 100 has decided not to sign up for, the community banks just are against RTP because they view it as a big bank initiative. The community banks, actually, honestly, they hate the big banks almost as much as I do. So they are not signing up to RTP anytime soon. And it's probably gotten pretty much close to max adoption. But it's not necessarily well-known fact is that the Fed does actually process ACH. It processes less than half of all ACH volume. Little bit over half is actually processed by the clearinghouse. They have a subsidiary called EPN or something. So when Chase sends a ACH to BOFA, it probably goes through the clearinghouse. When Sila sends an ACH to Chase, it goes through the Fed, and the Fed and the clearinghouse work to kind of basically route it, so it's all seamless behind the scenes. We probably will end up in the same way with like FedNow and RTP, because they're both being built on ISO 20022. But that's, as I said, we're talking a post-2025 world. Don't hold your breath. Any other questions? Nope, okay. So let's move on to the fun stuff. Today we're going to set up a basic Neobank wallet app in 5 steps. If this would be the moment to break out your laptops, if you guys want to do that and can follow along. The things you're going to need, computer with internet access, GitHub access. You'll need Node installed, and if you don't have Node installed and NPM working, I wouldn't recommend starting now because that takes like half a day to just like, you can run brew install and then go away for a day and come back. And then you'll need to register in the Sila sandbox. It's, just go to silamoney.com/register, and it takes 5 minutes. You need to register and create an app and download your credentials so you can plug them in. And if you guys are following along, then I'll actually, these are the next things you'll have to do. You'll have to clone the demo app, just a git clone, find a nice folder and git clone into that. You'll have to tab into it and do an npm install, and then do an npm start. Probably takes about 5 to 10 minutes if you have everything set up, because the clone and then the npm install takes a while. The cheat sheet, which is what I'm going to do as well, is you can just go to demo.silamoney.com and follow along on this, because we host it on the website, and you can just plug in your credentials and skip all the console commands. So I'm just going to quickly go in there, and can you guys all see this, by the way?
Yes.
Yep, beautiful. So this is the basic demo app. It runs on one of our servers, and I'm going to use this to kind of illustrate the different pieces of building a neobank. It's neobank, but it's really any fintech infrastructure, right? Most of these things are stuff that, whether it's a neobank or a commercial lending app or whomever, you're going to end up needing to do some combination of these things to go live, right? So if you register in the console, you can just come in here, go into your app settings, plug in your credentials here, and this will start working. First thing you need to do is you're going to onboard somebody. That's an end user on our platform. And it's basically an entity that you create in our platform. That entity could be an individual, or it could be a business. The business onboarding is a lot more complex, so I'm going to skip it, and I'm going to go straight into the individual onboarding. And as you'll see that, this app just submits API calls to the API. You get the responses, and you can see the JSON on the right-hand side. First thing you need to do is pick a handle or an identifier. I think I am up to 31 now, so let's check. Yep, it's available. So now I'm going to create a user. Hold on. I should be faster at this by now. And we can register this user. Hopefully I didn't mistype anything. No, it's all good. Now I want to be clear about this. We're all operating in the sandbox. So none of this is real data. That is not my real SSN. That actually is where my real address, because that's what auto-filled, but whatever. And sadly, I am not 31 years old. So we can continue. We have registered a user. Let's KYC them. And we can refresh status, and in about 15 seconds or so, you'll see that they will be approved. So that's the first step, but let's talk about that a little bit, right? Why do we do KYC? And the answer is because it's the law, right? The Bank Secrecy Act was passed in 1970, and it required that financial institutions in the US, actually, I take that back. Banks in the US were required to know your customer. They had to, that's what KYC means. They had to know who their customers were. They couldn't, like Swiss banks did for a long time, they just couldn't bank an account number. And they had to build these programs to understand who their customers were, what they were doing, monitor them for money laundering or terrorist financing or a bunch of illegal activities, and then report that to FinCEN via a thing called a suspicious activity report, right? The important thing to remember here is that the Bank Secrecy Act was passed in 1970, and it required banks to do KYC and AML and CTF and SAR and a whole slew of things. The Patriot Act was passed in 2002, and it required financial institutions to do KYC and AML and sort of CTF and all these other things. Between 1970 and 2002, I believe there were another 11 acts of Congress passed on this same topic. So if you just printed out all the law, it's probably like a stack of paper as tall as me on just this topic, right? Is any lawyers in the room who are experts on this stuff? Okay, so I have never actually read any of those laws, and honestly, most people haven't, right? It's just trying to understand your KYC requirements from first principles is extremely hard unless you're a lawyer who's deep in this shit, right? What most people end up doing is just following whatever is current industry practice and working off of that and trying to innovate on top of that, right? And the basic requirements, maybe I'll just make this a little bigger here. The basic requirements are that you need to have a name, an address, a date of birth, a social security number, and that's what's required. And we, through our API, collect an email and a phone number because now everybody has those. But that's, strictly speaking, you wouldn't need that for KYC, and a lot of banks historically have not collected it. There is a whole industry of how to get this information and how to verify it. There's companies like LexisNexis, Secure, all the credit bureaus, and there's many, many different ways of verifying the information that you received, right? Like if somebody puts in Jane Doe into a form field with 111222333, how do you really know that that is a real person and that is their SSN? Broadly, there are two ways. One is to rely on credit bureau data, because the credit bureaus have SSNs and all this information. The other is to rely on public records data. That's what the vendors that we use public records. You usually end up getting slightly better results with that. The few things to kind of look at, right? A lot of KYC is done with just the last four of the SSN. Sometimes folks will require the full SSN. This is really just a bank compliance decision. Some banks view that they can allow last four. Some require that they require the end user to submit the full SSN. On the back end, the bank always gets the full SSN. There's a bunch of services where you can submit the last four of the SSN and a name, and you'll get the full SSN back, which you can then pass on to your bank partner so that they can keep it in their records, right? So end users may get an illusion that, hey, by just putting in the last four, it's more secure. That's not actually true. Behind the scenes, everybody has the full SSN. It's just, did you enter it in, or did you enter last four and it was looked up? Any questions so far? Because I can keep talking about this stuff forever. Yes?
Yeah, I know there's some regulations about if you do have an SSN, but you're not a resident, a U.S. resident, say like you came on a visa as a student, banks usually need you to like come in person and like verify you, like that. How do neobanks?
None of that stuff is true, right? Like, so this is the thing, right? Because the law on this topic is so complex and so outdated, right? Like much of it is still from the 1970s. It really comes down to have banks interpret it. There is no law, no requirement. I've never found a regulator who said that for people on an H-1B, as an example, there's a lot of them, you need them to come in person, or you can't bank. All the law says is that you have to know who your customer is. It doesn't even say that you have to bank only Americans. Now, most banks won't touch non-residents, but some will. And that is also totally legal to do if you can verify their identity. And it's kind of funny because like a lot of what the law did from 1970 to 2002 was expand KYC from like banks to credit unions to broker dealers to money transmitters, pretty much everybody in the financial space, right? But if you look at the SEC or the kind of the wealth management industry, most people in the world don't have a US bank account. Mostly only Americans do. But you go to any place in the world and you find that like the 5% richest people, you'll probably find that they have a brokerage account in the US. The US is the single biggest like destination for offshore tax havens, offshore wealth, and Switzerland, Singapore, all of those are number 2. So the SEC and FINRA is very comfortable with US broker dealers onboarding people in India or in Argentina or wherever. And there's a whole process for how to do that. It's not as well understood in banking, but it's totally legal to do. You just have to find a bank who is able to, have to find a compliance officer at a bank who's actually willing to look at that and say, hey, this has never been done this way before, but then none of this shit has ever been done before. So when we are going to do this, what do we need to do? And that's hard to find. Questions?
Does KYC include OFAC and all that, or is it literally just KYC?
Typically it does. And so when we do KYC, we do OFAC as well. It's not technically not necessary, but almost always you'll find that it's probably, I think all the KYC vendors that I know also will roll in an OFAC check as well. You can do your own OFAC check if you want, but it is, the OFAC list is public, right? So you can do that. And it's not just OFAC, there's PEP, there's a lot of sanctions lists. There's like, the OFAC of like Germany. And so depending on who your customer base is, you may want to scan against that. There are specialized vendors who will do much larger scans. You will never, I've known compliance people who have been in this industry for 20 plus years and they're still waiting for their first real OFAC hit, right? Because it's a public list, so everybody who's on the OFAC list knows that they're on it. They will never sign up with that name. They're not that dumb. What you do end up getting, there's Mustafa Kemal is on the OFAC list. Now, he was one of the 2007 London metro bombers or something. He's in a jail in London. I don't think he's ever coming out. But he's on the OFAC list. And there is another 10 million people in the Middle East named Mustafa Kemal who regularly have problems because of that name, right? So you get almost uniformly, you get false matches, and you build a process to eliminate them, and then it just becomes business. Yeah. So yes, you would typically do an OFAC check behind the scenes as well. Any other questions? Another thing that comes up a lot is like documentary KYC versus non-documentary. This is one way in which the US is very different from most other parts of the world. Not all, but most. Most US KYC does not require any actual like photo of a document or anything. So if you have a vendor who says, no, you need to supply a driver's license photo, just say, look, I signed up for Chime and I signed up for Acorns and I signed up for like 6 other things. They never asked me for a driver's license photo. Why do you ask for it, right? And what it really comes down to is like conversion. A lot of people who think of KYC as a way of reducing fraud. And it does help with fraud, like verifying that Jane Doe really exists and probably does live in San Francisco and this really is her SSN. It does shrink the amount of fraud. But the reality is that like everybody's personal data is available on a dark web server somewhere, and there is all types of KYC fraud, synthetic ID fraud. All the fraudsters know how to beat this KYC when they want to. If you build a large fintech, it's not if, it's just when you'll get hit by fraud. So in the KYC step, you probably want to optimize for conversion and be like, hey, if I get 100 users, how can I get from 80% approval in 10 seconds to 90% approval in 10 seconds? And then you want to do a lot of other things to reduce your fraud problem. Adding in a documentary step is just going to reduce your conversion. It might actually does help a lot with fraud. So you want to tune on whether or not you do documentary, when you do documentary, in what ways you do it, and you have to think of it holistically. Questions on that? No? Okay. Last thing. Oops. Oh, damn, I managed to break this. Okay. Last thing, when you walk into a store, and you pay for something, the merchant does not need your social security number. They, in fact, don't even need your name. They can just take your cash and provide the goods or services, and that is totally legal. In fact, that's how the US has always operated. So there has never been a KYC. The KYC is required for like broker-dealers and money transmitters and banks, but it has never been required for merchants, right? Merchants don't need to know who their customer is. So that's true offline. It is also true online. So Stripe needs your name and card number to process a card transaction. They don't need your SSN, and they don't, I mean, they have KYC APIs, but they don't need it for like, whatever, 99% of online use cases, right? So there is a lot of use cases where you don't need KYC. Another one is a lot of like small dollar balances. So if you're onboarding people and creating a wallet for like $50 or $100, I think Venmo's limit is up to 300, and Cash App is also up to 300. They don't KYC you at all. And that's become accepted in the industry as well, because otherwise it's just uneconomical to work with those customers, right? So there are use cases and situations where you don't need to do KYC and you can onboard customers online. You just have to work through the compliance issues there. All good? Okay. So let's go ahead and link a bank account then. I'm going to switch back here. So let's refresh status. Hopefully, yep, he's passed. Great. Let's go to the next step. Oh, by the way, our entire platform is wallet-based, so you can create multiple wallets and just add, whatever wallet to it. So 1:1 relationship, so you can keep adding as many as you want. As many as your use case demands, actually. Okay, so let's move on. Linking a bank account. Pretty much most of your customers, I would expect, probably have a bank account. One of the core things you want to do is get that bank account information from them, to do an ACH transfer, to pull money, push money, or occasionally to even just scrape the transaction flow from that, right? The huge company in this space is Plaid, obviously, and there is Plaid, but there's also MX. Yodlee was the original one. There's Finicity, and now there's a whole subgenre of fintechs like Plaid for payroll and Plaid for X or Plaid for Y, right? You can just put in a routing number and an account number. There are some problems with that, though. I'll come to that in a minute. We partner with Plaid and have a bunch of different ways to do it, but this is kind of the simplest way, so let's just do it quickly. This is also the Plaid sandbox, so this is the kind of the magic incantation, which will automatically work in their sandbox. Of course, if you're in production, you need a real bank account and real credentials. And and there we go. Now we linked a bank account, right? So let's talk about that a little bit. Why not just use routing and account number, right? Like you ask your customer, they look it up from their checkbook or phone app maybe, if they're on Chime or whatever, and they feed it in. The problem with that is just fraud. Maybe back up a second, right? Like we regularly have customers who get hit by fraud, and usually we work a lot with like early stage companies, so it's usually the first time that they've experienced any real fraud. And whenever that happens, I always tell our customers, congratulations, right? Like if you're in this business and you have never seen fraud, it's because you basically never got big enough to matter, right? The sign that you're getting big enough is that the fraudsters are discovering you and they're beginning to, and the worst outcome is when you have fraud and you don't even realize it, and then you discover it like 3 or 6 months later and you've lost huge amounts of money. So you want to discover it quickly. It's guaranteed to happen if you get big enough, and so you just have to learn to live with it. And manage it. One of the most common types of fraud is just ACH fraud. Just like everybody's SSN and address is available on the dark web, a lot of people's bank account and routing number information is also available on the dark web if you know where to go and look. So it's just not possible to rely on that, and it's actually quasi-illegal. So ACH is regulated by this organization called NACHA, it's the North American Clearinghouse Association or something, whatever. Even though the ACH is operated by the Fed and the clearinghouse, NACHA is the industry body which sets the rules. And they have this thing called the web debit rule, which says that if you are doing ACH and you're getting information from your customers online, you need to verify that information. You can't just take a routing and account number. You have to verify it. What is a way of verifying it that is NACHA approved? Plaid, MX, Yodlee, Finicity are all approved, and they're all instant, right? There's other ways. You can get the account and routing number. You can do a test transaction. That's called a pre-note. And then if you get a return, you can say, hey, this works. So all of those take multiple days to actually finish. This is the one way that is actually instantaneous. Not exactly true. There's some vendors like Microbilt who are also approved. But if you can get your customers' information this way, it's instant, it's reliable. It actually reduces fraud, because when you're pulling data on account and routing number from through Plaid, you might as well pull the name and compare it to what you KYC'd. And if it's Jane Doe that you KYC'd and the bank name is Jane W. Doe III, that's fine. The name on the bank account is John Smith, that's a problem. Let's hold on here, right? So you can do these checks behind the scenes to help reduce fraud. Questions? No? Okay. Next thing to do is to initiate an ACH debit. Let's put some money into that wallet. It's very easy. You just put in a number into our /issue is what our API is called, and you hit go. We denominate everything in cents, so that's $123.45. You say, okay, this should take a second or two. Nothing happened. Why, what happened? Let's go look at what's happening in transactions, right? Man, the Wi-Fi is slow. Okay, well anyway, while this is loading, let me walk you through the ACH lifecycle. Before we go there, how many of you guys are familiar with ACH and how it works and the history of this whole thing? Fair number of people. You guys want a quick primer? Sure, okay. ACH is probably the biggest retail payment system in the US. It connects all bank accounts, all banks, all credit unions are on it. It is a 47-year-old payment system. It started off in California, where a bunch of banks were like, hey, we all got these newfangled things called computers. We could just send files from our computer to your computer and clear transactions that way instead of like paper checks, right? Which was the default. Or they had things called clearing drafts and everything else. So they had this idea of creating an automated clearing house. And they came up with this file format, loaded transactions onto that, in that format onto a file, put it on a magnetic disk, which is like this big, so it's bigger than me, and then they would truck these things around to a centralized location, and then just swap entries from one to another. So if it's going from bank X to bank Y, take that entry from bank X's file, put it in bank Y's file, reverse, do a big like file sort, create new files, and send it back to people. That's how ACH got started. Eventually, networks came along, and then the internet. So all this file swapping back and forth is now done electronically. But the basic format and the basic structure has not changed. It is an 80-character fixed length file, which is, the format it's been tweaked a little bit, but it's basically the same format from like 40 years ago. And this is how about 70 trillion a year gets moved around in the US. So when you initiate an ACH debit, the originator, which is an originator, and there's what's called the ODFI, the originating depository financial institution, basically your bank partner. Right? In our case, it's Evolve Bank and Trust. If you're working with somebody else, it's that bank, right? You create that file and in that NACHA file format, and you send it to the bank, or you call our API and we create the file and we send it to the bank, right? Ultimately, a NACHA file gets created and gets sent to the bank, which is the ODFI. There are cutoffs for the transactions, like 3 a day and different times when you can the bank can upload these to the Fed. But what the bank does, it takes all the ACH files it has and runs a giant file merge and creates actually a few large ACH files and then sends that to the Fed. The Fed overnight maps and kind of sorts transactions and then sends next day the files back to the banks who now know that I tried to debit, $123.45 from my Chase account. Chase, when it gets the file tomorrow morning, has two options. Well, they have a bunch, but they have two basic options. They can just debit my account for $123, and that's it. That's the default processing. They don't do anything, right? They just do that. And then if I don't have the money, or they froze my account, or a bunch of other reason codes, they can, they can actually reject the transaction. And what they'll do is they'll create a return file and say, hey, we rejected this transaction. Here's the return code. They'll send it back to the the Fed. The Fed will then, again, create a return file and send it back to the ODFI. And the ODFI will then probably notify customers, hey, Sila, in this case, your transaction of $123 was rejected by Chase with a return code of R01. Apparently, Shamir doesn't have enough money, right? R02, but whatever. And that's how the whole system works. Now, the problem here is it is all batch-based, and it is not even close to real time. The best you can hope for is same-day processing, which is a misnomer because it's occasionally same day. And for debits, it's really next day. But it speeds up everything by a day, basically. And so what's going to end up happening is you don't know if that $123 transaction is going to work until you wait for the return file to come back. And the return file the transactions can be returned up to 60 days after they were initiated. So you have this window of risk which goes from like 0 to 60 days. Now, you just can't wait 60 days. There's no notification of success. There's only notification of failure. And so you have to wait 60 days to be guaranteed that there's no failure. And so at what point do you post those funds to the end user's account, right? And that's actually a risk-based decision. You probably want to model that based on your use case and everything else. And a lot of thought goes into it. We at Sila do 2.5 days because we see upwards of 80% of returns come back in that time frame. But it also depends on whether it's next day, same day, and a bunch of other factors. So this is ACH processing, and it is quite complex. Any questions on that? No? All of you guys are good? What we do in the sandbox, if this worked, is that we don't want you guys to wait 2 days to test stuff in the sandbox. So we actually move through all the statuses of that payment where it was queued, then it was submitted to the bank, and then now we got a return or we didn't get a return and the funds are available. If we kept refreshing that, you would have seen all those statuses go by in about 5 minutes. The transaction was successful. So now you'll see that there is a balance in my wallet, and I can transfer it to somebody. Let's transfer it to somebody else. There we go. That all worked. Yep, and now we can actually redeem some of it. So, and a redeem is just it's a reverse of a pull, right? It's an ACH push where you're sending money from the ODFI to the RDFI. A pull is a debit, which is pulling money from the RDFI into the ODFI. Any questions? Yeah. Because we wanted to just keep the units like constant and be like, hey, we're not going to do any transactions less than 1 cent. And you can have decimals, but then you need to use fractions in a bunch of different situations. So it's usually, in fact, most ledger systems, if you go and look at how they're actually built, they usually work as a unit of like, where a cent is or sometimes it's 1,000th of a cent in a lot of like online trading systems is like the core unit. And you'll see like, 400,000 and that's actually only $400. That's the system that's how it works, right? Easier to work with ints if you can do that. Question?
Are you guys not thinking about international at all?
Sorry, can't hear you. Could you?
Are you guys not thinking about international at all? Because the new currency for there's no value.
So our vision for, by the way, talking about Sila for a moment instead of, our vision is to do this for all global payment systems and actually blockchains. We support Ethereum as a blockchain right now. We'll add more the next few years. And so we'll connect up ACH cards, which you already do, wires, which you already do, probably checks. I mean, I hate those things, but there's still demand for them. And then, whatever, RTP, FedNow, SEPA, BACS, UPI, FasterPay, Australian. There's like 100 global payment systems. We will integrate them all. Just give me 10 years. Any other questions? You guys are an easy crowd. I was expecting a lot more questions. So we just did this step. But you're going to say, but wait, at the most, that was just like a basic wallet app. That wasn't a neobank that we just created. What about international transfers? What about bill payment? What about card issuance? I mean, what is a neobank really a neobank if it doesn't issue a card? What about crypto exchange? That's the hot new thing, right? All of those are important things, and depending on whether you're building a neobank or some other sort of specialized application, you may or may not need them. We support actually all of those things, but we choose to support them through partners. So we partner with companies like Arcus for bill payment, Lithic for card issuance. We have a few partners in international transfers as well, and actually a couple of crypto exchanges built on Sila, which we partner with as well. So those are all not built into our APIs, actually quite deliberately, because we feel like each of those, it's better to go to a best-of-breed card issuer or bill payment company rather than try to wrap something and build something substandard. So accessible through our marketplace and with built-in compliance and everything else, but it is a separate integration. That's how we do it. Of course, there's other companies that do it in other ways. That's actually all I had prepared for you guys. What can I answer for you guys in terms of questions?
So why does it matter that it's a digital wallet, that it's held as Sila stablecoin instead of just cash in a bank account?
It isn't. I mean, it is held as cash in a bank account. You can convert it into a stable coin on Ethereum, but that is totally optional. By default, all our funds are on our private ledger. And it's if you want it to be as a stable coin on Ethereum, you have to add an extra API call into extra parameter into /issue, redeem, and transfer, and you need to set up your app to be able to do that. Some of our crypto customers do it that way, and they want to be on blockchain. I mean, it makes sense. They're doing NFTs and stuff like that. Most of our fintech customers don't.
Right, so how do you differentiate for like a Treasury Prime or like the other 10?
Oh, man. It's different from like everybody, right? In the sense, everybody has their own unique spin. The way I think about the space broadly is that there's those who do regulated versus unregulated, right? So if you look at companies like Stripe or Adyen or even like Phoenix, their core business is swipe a card, put the money into a bank account for a merchant like Shopify and do it like, 1 billion times a day, right? It's a massive business, it's going great, and they have a decade of growth to do on that. We don't really play in that, right? Like you could use our APIs for that, but it's not optimized for that. We don't have the widgets, we don't have all of that stuff. Then there are folks who do regulated payments. And those are, their customers look not like merchants, but like fintech, insurtech, wealth tech, reg tech, crypto, you guys basically. We play in that space. So that's the first kind of like lens. You have to take all the ones who do merchant processing basically off the table because they don't compare. And then in this regulated payment space, I feel like there's two broad approaches. One is what I call bring your own bank, and the other is fully encapsulated. So we have a bank partner. All the funds in the FBO accounts sit in FBO accounts at Evolve Bank and Trust, which is our partner bank. Love them. They work with us. They work with Synapse. They work with Stripe, probably 20 others in the space. But our customers, when they onboard, they go through compliance and due diligence and everything with us. They never talk to anybody at Evolve. If you go talk to in the bring your own bank space, you find folks who provide you the technology, but you then have to talk to the bank yourself, sign a deal with them, go through compliance approval with them, and it tends to end up taking more time. You may get more control long term, and it might be a more flexible option long term. But if you're optimizing for speed to market, you probably will want to look at folks like us, because we regularly get customers live in 6 weeks. I put Treasury Prime more in the bring your own bank model.
Yeah, so we've actually done that, and like it took us 6 months to go live. It's useful, but to your point, it's not super.
I mean, I know Chris and Jim, and I love those guys, and I actually know all my competitors. I love all of them, as I said, like the way back when I was running Simple, people would ask me, "Hey, Moov launched or Green Dot launched, right? Are you worried about competition?" I'm like, if I'm worrying about Moov or Green Dot, I've already lost, right? I'm looking at the 99% of the market that is with BofA, Chase, Wells, and Citi, and 100 other banks, right? If I'm competing with Moov for these early adopters, we're finished. That's the market that we need to go after. I feel the same way now. Like this, as I said, like all of the entire fintech ecosystem from PayPal to Sila combined is barely 1% market share of global financial services. So the competitors I want to look at are like all the big banks, right? And all the in-house, right? Like you look at folks like, well, PayPal, of course, but Airbnb has money transmitter licenses in 48 states, and they have I think 400 people in their payments team. Because if you wake up and go tomorrow and book a villa in Italy, and then you cancel it after a month and rebook in Vietnam, they somehow have to make this money flow work across the globe, right? There is no AWS of money, and it is sorely needed.
Where do you see most of the adoption come from? What kind of companies do you see over, say, marketing?
I didn't get the second part of your question. Where does this?
I was saying, what kind of companies do you see those ACs over card payments? So the two guys over.
So it very much depends on use case, right? So if you're doing merchant processing online, if you're selling goods or you're helping your customers sell goods or whatever, however many layers that is, if you're selling goods and services online, that is heavily card-based, right? So if you want to be in that business, you kind of have to end up competing with Stripe or using Stripe or one of them, right? Like you are not going to be able to tell your customers to switch. Some people are trying. I haven't seen anybody really make it work yet. It is going to be card-based. You're going to have to do it all card-based. And those folks, that is Stripe's business, and Stripe is very good at it. If you're building a PFM app and you want to help customers save by debiting their bank account by $6 a week, you can't process that on a card. It's unaffordable. The card pricing makes it impossible. And anyway, you're going to be in the regulated world. Compliance is going to be a huge issue. Stripe isn't really set up for that. You're probably going to end up with somebody like us. Now that's a broad generalization. There's 3,000, 5,000 fintech startups in the US. There's lots of ones in the middle doing B2B marketplaces, which are crowdfunding. It's quasi-regulated. It's there is overlap in the middle. But honestly, I don't think we've ever run into Stripe as a competitor. It's very much like customers who need ACH, wallets, PFM, money movement, wires, they end up with us. Those who need card processing at scale probably go to Stripe.
I think someone told me Sila was down in 2018.
Yes.
Back in 2018, did you see a huge gap in the industry?
Did I see what?
A huge gap in the industry. And I guess the core of my question is what motivated you to start Sila?
Oh, okay. What motivated me to start Sila? So basically, this is what I've been doing for the last 12 years, right? I was the guy at Simple who architected the backend infrastructure. I found Bancorp Bank. I signed the deal with them, selected the processors, did all the architecture. Actually, is Jared around? No, one of the engineers who did that has his own startup now, and he's here too. And I worked with him closely on the ledger and everything else. So I built it at Simple, and it took a freaking long time. And then BBVA acquired it, and I heard about this idea at BBVA of building an API platform. Actually, it was really just building a platform. I added the API in there. And then I was like, yes, please do this. the world needs API platforms in banking. And if this had existed, I wouldn't have spent 3 years of my life just getting to the moment where I could launch, right? And I was like, do it right, please. Don't screw it up. I ended up running that business, did it for a couple of years. Despite, or maybe because of my best efforts, we still ended up screwing it up. And so I got frustrated and left, and I was having drinks with a buddy of mine who also has his own fintech startup now. And I was just like bitching to him about like, the world needs, we need a global payment system. We need an AWS of money. And all of these, why 5,000? We should have 50,000 fintech startups. And it should be easy to build and ship. And you guys should all compete for customer attention and build super cool apps and then take over the world, right? He was like, Shamir, you've been talking about this for years. Why don't you just go do it? I'm like, well, fuck it, yes, I am. Now, that was the motivation. Sure.
So I believe other companies like Walla bring this standardized, so what do you see is the thing that they don't have it?
Dwala is a great company, and I know Ben going back a long time. And Dwala has been around. I'd say they're probably the closest to being a direct competitor. There's still quite a few differences, which we can chat about. I just never felt that they shared the same vision. And I felt like, this is me talking shit about my competitors, so take it for what it's worth. I'll tell you that Ben has a great team, and it just felt like the product had stagnated for a long time. And there wasn't, like, they didn't support crypto, they hadn't added a bunch of partners, they hadn't added a bunch of capabilities, and it felt like it was just slowly withering on the vine at that point. And especially on like the compliance side and supporting customers with like weird use cases going live, I didn't feel that they were that good. But we still see them, they're growing. And as I said, their API platform is actually one of the best out there. I can say quite honestly that I borrowed a lot of ideas from them.
Where do you see them competing with you guys? Like, I just...
Mostly at like...
ACH is really all they do, right?
Mostly all they do is ACH, and a lot of what we do is ACH too. Now we do, I would say, more than just that, and we get a lot of like, especially crypto and NFT customers who would never be able to go live on Dwala, but on that core ACH use case is where we overlap with them the most.
So you guys, in that case, you guys have your own ACH stuff that you do instead of like using...
Oh yeah, no, we directly integrate into Evolve. We do our own ACH file processing, and this is the third time I built an ACH file processor and third time I built a ledger, so. It is extremely like weird and arcane, and the edge case issues you run into are just irritating. I actually saw one return code like a year ago, which I had never seen in 10 or 12 years before, and I was like, wow, there's still return codes I haven't seen yet.
I know earlier you mentioned with ACH, like it's usually within 3 days, 80% of your
Returns come in, yeah.
come in, right? Like what use cases have you seen that's taken a lot longer?
It's mostly, so it depends on the type of return. The reason for the 60-day like limit is actually what's called Reg E, Regulation E, which implements the EFT Act. And that basically states that consumers have 30 days after they get their bank statement to challenge an unauthorized transaction. And if they then, so if you get a bank statement and you say, hey, I don't recognize this transaction, and you have 30 days to call the bank and say, reverse it. And the bank under Reg E has to. Now that's if the account is a Reg E compliant account. So don't try this on Venmo. But on core banks, it will pretty reliably work. And the theory behind the 60 days is statements are sent monthly, so you can, the longest it can be is 30 days before it shows up in a statement, and then you have 30 days. So that's why the NACHA rules say 60 days. And it's those returns that come in the long tail. It's the R10s and R11s, I think, which is the unauthorized returns, where somebody calls up and says, and unauthorized returns in the world we operate in is almost uniformly fraud.
So for these returns which you're talking about, R10s and R29s, how do you safeguard against those costs and what?
That's where you have to do your work upfront, right? So there is no way to like stop somebody from calling up the bank and saying that they didn't authorize a return. The reality is that if people are doing that, it's rarely that they're trying to defraud you themselves. First-party fraud is still, it's more common now than it used to be, but it's still very rare. What's most likely happened is somebody stole Jane Doe's identity or created a synthetic identity with Jane Doe and then linked Shamir's bank account because they stole my username and password from some hack somewhere else and figured out I was using the same one for this bank account, and then connected the bank account via Plaid and debited at $2,000 or whatever out of it. And then as soon as I see that, I call the bank, and then the bank sends a return on that ACH to the ODFI. Right? So what you need to do upfront is make sure that it is really me and that I am really in control of that bank account. And then actually if you have really good proof that it was me and I did authorize it, you can actually reject a return. And if you reject a return, then the bank on the other side can reject your rejection. And then at that point, it goes to like basically the ODFI bank and the RDFI bank get together and talk and they argue about it. And if you can produce proof to the RDFI that yes, Shamir Karkal did authorize this $2,000 transaction, even if he says he didn't, they will then force it and post it to your account, right? But that happens very, very rarely. The most realistic scenario is that somebody stole my identity or stole synthetic identity fraud. Those are the things you have to stop doing. As I said, KYC helps a little bit, but what you need to do is device ID, right? Like if it's signing up with Shamir Karkal with an address in Portland, if I'm in Denver, okay, that seems reasonable. I am occasionally in Denver. If I'm Shamir Karkal is signing up with a jailbroken iPhone from northern Nigeria, probably want to block that. So that sort of device ID, there's companies like Sardine, I think, who's presenting here. They do that sort of stuff, and you can get a lot of information. Then you can do SMS opt-in verification. You can do Plaid identity checks. You can do the KYC data actually comes back with a lot more data, and we include it in our response as well. And you can combine all of that and run a risk model on it. And at that point, you can get your fraud losses to probably less than 1% at scale. Again, all these numbers have caveats. It's very different by use case. Some use cases have zero fraud. Some have very high fraud. But late returns are almost always fraud. Yes?
Where does AML fit in? Like you can now transfer from Sila to some random bank account. You have some responsibility to make sure there's not money laundering.
Yes, we monitor transactions, and if we find something suspicious, we will contact you as the developer, not the end user, and we'll try to understand what's going on. I mean, we have customers who do 100, 200K transactions regularly. It's totally not surprising. They're in commercial real estate. Yes, and we will file a suspicious, or we will work with our bank partner and they will file the suspicious activity report if it's needed. So yeah, no, AML is not a choice. Exactly. Yes. If you're, and this is another thing, right? Like this is goes back to the whole build versus buy. If you're building, you're going to have to build all these ancillary capabilities as well, not just ship it, but also be compliant when you ship it. Because at some point, your bank will audit you or NACHA will do an ACH audit on you, and if you're not compliant, you'll get into trouble. Yes?
Sort of going off this build versus buy. You mentioned the Sila marketplace. What's your thought process there in terms of how you vet folks getting in there, why you're not building into those APIs directly, as they're typically able to get better economics?
I honestly don't care about economics. I'm an early stage company, and if you're an early stage fintech startup or a startup, you probably shouldn't care too much about economics. You need to have a good story about how your economics will work in the long term, but in the short term, optimizing for cost is usually a mistake. You want to optimize for growth with the potential to be profitable, right? So that's one thing. I find that working with best-of-breed partners like Plaid, Alloy, Evolve, Arcus, Lithic, they send us customers, we send them customers, we work together on a lot of these deals, and I'm like, sure, if I built all their capabilities myself, God, I'm not sure I have enough time left in this lifetime, or maybe I could wrap Fiserv or whomever else, and it probably wouldn't work. It wouldn't be the best of breed because, if I've built card issuing processors before, I've done ACH before, I've done ledgers before. Each of those things, doing it for just one neobank is a shit ton of work. Supporting 50, 100 customers at scale is so much work. You need somebody with that dedicated focus to do it well. So I always advise everybody, try to find the best of breed vendors and work with them because it just improves your chances of success early on. And don't worry too much about cost. If you get to Chime scale, go back and renegotiate your pricing with everybody, right? And if you don't get to Chime scale, then did it matter? Maybe not quite Chime scale, maybe like a tenth of the way. But if you don't get to that Series B seed round, then that's what you need to work towards, right? Any other questions, guys? If not, I don't know how much time we have left. I think we still have like 30 minutes or so. I'm happy to give you guys the 30 minutes back. You can come and chat with me anytime. And if your Git clone or NPM install didn't work, I'm happy to problem solve that as well. I just didn't do it myself. Thank you, guys. Hmm?